Anyway, it's time for the wrap-up for today. This is the wrap-up for the live market open on Thursday, December 10th. We covered the Swiss National Bank's decision first and foremost during the show. So the Swiss National Bank decided not to change interest rates, to leave the negative deposit rate at minus 0.75. That led to a strengthening of the Swiss franc against its counterparts, most notably main trade partner, the Eurozone. Euro-Swiss fell exactly to 108, very suspicious, and from there it rose back up. Perhaps they accompanied their decision with an intervention. The main reason not to act this time perhaps was the decision last week by the European Central Bank that decided to cut the negative rates, but not too far. So we have on one hand a stronger Swiss franc, but on the other hand, perhaps some kind of intervention, and they said they're willing to intervene in the future, which is not a change of policy. They will remain active in markets, and they see the franc as significantly overvalued. So that was a conclusion of the decision by the Swiss National Bank. Dollar Swiss is a bit higher also. Okay, and let's see what else we have in markets, what we had and what we'll have. Okay, so we had yesterday oil prices continued struggling despite a drawdown in inventories. This has impacts on emerging markets. For instance, the South African rand is just collapsed yesterday. The Chinese yuan was devalued. Other emerging markets are feeling the heat as well, especially those exporting. This flow into safe havens. Safe havens mean that includes the euro. Euro dollar jumped over 110 yesterday. Now it's sliding back down, back below the Draghi high of 109.80, but the euro still gets some safe haven flows. Okay, pound dollar got carried away, 151.66. Today we have trade balance from the UK just after the show at 9:30. More importantly, the Bank of England's rate decision. First thing, watch the pattern of the voting. It was 8-1 against policy change. One voted for hike. If we have the same pattern, it's pound positive. In the immediate reaction, if we have 9-0, it's pound negative. And then we have to look into the minutes to see what this, how they see the Eurozone, for example. We talked about how they see other inflation, wages, things like that. If they provide any hint about when this elusive rate hike in the UK will ever come. Getting back to safe haven currencies, finally we had a breakdown of dollar yen. It was in a very tight range for, not tight, very distinct, very clear range for a long time, 122.20 to 123.60. Boom, collapsed to new support at 121.10. 121.50 is pivotal line in the range, and 121.90 is next resistance, keeping a safe distance from the previous support line of 122.20. Dollar CAD, all in all, some stability in the Canadian dollar, but way above the previous highs for dollar CAD. 135.50, 136.20 establishes itself as resistance. Support still 134.60. Aussie dollar rose nicely because of an excellent jobs report. Looks too good to be true, but good enough for the Australian dollar to recover despite worries about China, despite falling commodity prices. Flirting with 73.60 resistance, 72.80 is support. Kiwi dollar enjoyed a hawkish cut, which is hard to understand, but maybe make it simple. And Reserve Bank of New Zealand was expected to cut rates, so no surprise there. The surprises came from the tone. They said that rates are expected to remain steady, and they were not complaining too much about the exchange rate, only saying it is unhelpful. So with no further rate cuts in the horizon, Kiwi dollar is back to the high range between 67 and 67.90. Further resistance 69, support 66. Okay, what else do we have today before we answer some questions I see here? We talked about the Swiss rate decision. no cut, stronger franc. UK trade balance, UK rate decision and meeting minutes, jobless claims in the US as usual at 1:30, import prices as well. As usual with the bulk of US releases, if all of them go in the same direction, it can have an impact because these are not top tier figures. These are, well, second tier, still important jobless claims, but if jobless claims come out better than expected and so do import prices, it's dollar positive. If both come negative, it's negative for the dollar, but they could also go in different directions. And the Bank of England's Mark Carney also speaks at 6:30 GMT. He already spoke this week, and it wasn't about monetary policy, so I'm not sure if it'll have an impact, especially after the rate decision. But if you're trading the pound, this is a time to check out what Carney says. Okay, that's the events for today.